Dave Keller here with StockCharts.com, and welcome to our latest episode of Behind the Charts. On this show, we sit down with some of the top technical analysts, strategists, money managers, traders in the industry and learn the lessons behind the charts. Stories from their career, how they got started, how they learned about investing, and lessons that they have learned, painful lessons at times along the way. Today we're sitting down with Michael Kahn. Michael is at Lowry Research Group based in Florida, although he's actually based in the Northeast. We'll talk about his trajectory, actually more of a market data sort of media background, working at Barron's, Bridge, and other places before getting to where he's at now at Lowry's. But Michael calls himself a Jargon Buster, which is really trying to, not dispel myths, but more dispel ways that we overcomplicate our descriptions of the market. He is all about simplifying what he is seeing around and focusing on supply and demand. Here's my conversation with Michael Kahn. All right, so we're sitting down today with Michael Kahn. Michael, you are somewhere that is sunnier and brighter than where I'm at. Where are you coming to us from?
It's hard to argue that in New York and it's sunnier than somewhere else, but yeah, it's pretty sunny. Not bad.
Not a bad day, I guess. So it's so good to sit down with you. For me, I followed your work for years when you were writing for Barron's. I think that's when I first was introduced to you and what you did, and you've had a great career that I'd love to kind of talk through over time. But start us at the very beginning. Where are you from originally?
I am from right where I am now. Okay. So I left and came back. So it's Woodbury, New York, where I really grew up, and I moved away and came back, and here I am. Been working at home for 20 years or so. Not pandemic related. It's just just the way it's been. And
you've been socially distancing for years, right?
Well, I attempt to go into the city occasionally, which I really avoid. And now I haven't been there in forever.
Right.
So I started, I guess, in this part of the career, I started at Merrill Lynch, the muni bond desk.
Yeah.
And I was in my 20s then, and from there I went to a company called Trade Center, which was owned by Knight Ridder.
Oh, wow.
That was a financial information company. We did technical analysis. This was a pretty early live technical analysis platform. It was not technologically advanced because that's all we had at the time. From there, we were absorbed into the Bridge machine when Bridge bought Knight Ridder Financial, and Keller and a bunch of other companies. I moved into the news division, and I was writing technical analysis for news. So I'm doing it without charts, trying to outline where support and resistance is in just words and numbers.
With no visual aids, right?
With no visual aids. I was doing stocks to watch. Look at these stocks, here's why, moving average, blah, blah.
No. And
then from there, God, you're making me go back in time. From there, I had actually started at Barron's before Knight Ridder Financial and Bridge folded in 2001. Yep. So I was working at Barron's since then until 2018. And now I'm at Lowry Research, which is based in Florida. And it's a pretty specialized technical analysis. Do a lot of advanced decline and breadth and stocks near new highs and things like that. And it's all under the guise of supply and demand. So we don't really care about moving average crossovers and price relations and things. I mean, of course we care, but we don't focus on that. We think that could be deceiving. So we look at the stuff behind the scenes, and so far so good. And I kind of like it. I've been there a year and a half or so, and I enjoy it.
I want to come back to Lowry's because it's a service that I've used, and I know at Fidelity it was our when we thought about supply and demand, accumulation, distribution, we would think of Lowry's. That was part of our toolkit. I'd love to go back earlier. You mentioned, I think it was with Trade Center was where you started to do work. Was that your introduction to technical analysis when you worked there?
It was. I was the first official product manager for the charting platform.
Okay.
So I wasn't a software designer, but I was the applications designer.
Yeah.
Figuring out what the market was doing. I mean, at the time, I mean, Bollinger Bands wasn't on platforms. This
Right.
is kind of early. So I'm,
And
I'm talking to
what
John
year was
Bollinger
that when
about
you were at Trade Center?
it. This is in the late 80s.
Okay. Okay.
So yeah, I met John Bollinger way back then. We were
Right.
arguing about what to call the bands, but ended up with Bollinger Bands, thankfully.
Right.
So it was pretty much early stage of technical analysis. I mean, there was just things that people were doing by hand, which really can't do by hand anymore. And it was nice to have it automated. But at times you had to wait for the chart to draw because everything was accessing the mainframe.
Right.
That was fun.
Right.
But anyway, that's where I learned technical analysis. That's when I first joined the MTA at the time.
Okay.
My boss was a technician and he got me into that. We started writing the Trade Center market letter,
Okay.
which was the weekly piece we sent out to customers, mostly to show them what's on the system. But it was real technical analysis.
Yeah.
We were doing anything from weekly down to tick data, which was pretty interesting.
Right. Now, did you have any early mentors that stand out? I mean, you've really charted a unique course, pun intended, through your career. But were there any early mentors to speak of for you?
It's not so much mentors as it is people I followed. I mean,
Okay.
it was John Bollinger, John Murphy. I read the Schaubacher book and the Pring book.
Yeah.
As we put a new indicator on the system, we had to figure out what it was all about. So I recall meeting Dick Arms, and I went to Peter Stottlemeyer's office to figure out market profile.
Right.
Back in Chicago at the Board of Trade.
Yeah.
So it was learning as we on the fly and putting out pieces to tell people how to use the system. What is an RSI? I had to tell people. No one knew what to do with it. So I ended up creating a series of these little articles, and that turned into my first book on, here's how you use these indicators.
Right. Right. Yeah, you're bringing back painful memories. I think part of my training at Bloomberg for technical analysis was proving out indicators in Excel and lining them up and having to demonstrate what they were. I don't think fondly back on that period, but I'm glad I did it because now I feel like I understand the mechanics more than people that didn't have to, go.
I had to make sure the formulas worked. So I was actually calculating this stuff by hand and seeing if that's what matched the screen said. So I was really getting into it. And I think that stayed with me in terms of understanding my indicators. Instead of just using a black box, I kind of, well, not all of them, but I kind of understand what a lot of them are doing and how they really apply in different markets.
Right. So you really learned technical analysis in the 1980s, in late 1980s, and then, further from that, which means you're learning the toolkit, I guess, right around the 87 crash and then the move higher and then into the 90s.
I remember being in the conference room at Trade Center that day, just watching it.
Yeah. So tell me about that those formative experiences. I mean, what was that like as a technical analyst trying to make sense of a market like that?
I was still very new then. I really was only with the company a short while. So it was more like, what's going on here? The world is ending. And I had this dour look on my face when I went home that afternoon and picked up my dry cleaning, and the dry cleaner yelled at me. He said, "This is not the world ending. What's the matter with you? This is not the real world." I remember that.
Right.
But watching it happen and feeling the sentiment, but not understanding it because I didn't know. So I'm still very green. I'm feeling the sentiment, and then I'm watching the market, and it's doing the opposite. Like, this is something to this here. That was really it.
Interesting. When you think about your career, you highlighted a number of different sort of phases along the way. What's a mistake you can tell us about that you learned the most from?
It's more about career in general than technical analysis.
Okay, sure, yeah.
It's sitting tight for too long. I was at Knight Ridder / Bridge for on the order of 20 years, and I was at Barron's for 18 years. So my advice in just general career is don't get comfortable. Doesn't always last.
Yeah, right. That's probably true. That's fair.
But in staying in one place, you don't push yourself and you don't force yourself to learn new things. Like me being at Lowry's, this is new, and to learn it and to really appreciate it, I think is a tremendous advantage for me, and that I have a whole new outlook on the world of analysis.
Yeah. Can you tell me a little bit more about what you're doing now, having transitioned to Lowry's? And again, I mean, I have a lot of respect for what's being done, because when I, first learned about just the simple things of buying power and selling pressure, it's the ways to think about supply and demand really helped me make sense of things, in my time at Fidelity. How would you describe the Lowry methodology? What does it mean?
It's pretty rigid.
Yeah.
It's very specialized.
Yeah.
And in being that way, we tune out everything. When I was at Barron's, I had to know what was going on in every corner of the market. And I had to know what was going on with short-term traders and middle traders and investors and just corporations who were hedging. I had to know all of that stuff. Now, I don't care. I stopped a lot of newsletters that, the free newsletters I get, and a lot of emails, just stopped and I don't read them.
Yeah.
I look at the market news in the morning, but I don't dwell on it. And I look at what I'm doing. And actually, I'll skip ahead. You asked me before this, is there some saying, market saying, that sticks with me? And to me, it's stick to your trick, tune out everything else. People say turn off the TV and all that. But I think it's now more than ever, it's really true that if you are doing something a certain way, get good at it and stick with it. Don't be blind. I mean, keep your eyes and ears open for other things, but really focus your work and your efforts on what you do so that you can really understand it and apply it the right way.
That's a great wisdom to share with people. It's fun. I mean, I find a lot of people, especially as they're getting started, kind of get scattered very quickly, and they're just, it's a fire hose of things that they could do. I love that idea of saying, stick to your trick, focus on what you're good at. What we do as technical analysts, and what you've done is really, the markets are very uncertain, right? It's unknown what's going to happen tomorrow. It's hard to make sense of what could happen and try to go through all that. How do you deal with that uncertainty of really the unknown, of not really knowing what's going to happen next? Do you have any strategies or suggestions on how to deal with that?
You can't be an absolute in what you do and say and act. You can't say, well, market is going up. You say, well, the market most likely is going up, and here's what I'm going to do about it. So it's not so much that the market's going up, it's the action I'm taking. The action is predicated on the fact that I think it's going up, but it's the action that I can control. So a lot of my writing has gone back to, all I can control is buy, sell, and hold.
Right.
I don't know what's happening, but I can just control what I do. And I feel that my indicators or my analysis is lined up a certain way. I take my action, and that's all I can do. And if I'm wrong, I'm wrong. And you stop yourself out or get stopped out by your broker and move on.
I like that. I like that a lot. So I'm thinking back, right? If you think of the late '90s, sort of into the tech bubble 2000, there you were at Bridge, I'm assuming then, until you left there, and probably already writing for Barron's around that time, I would guess.
Started writing in. I'm looking for direction by looking up. I think early '01.
Okay. Yeah. So when you think about that period, that late '90s, sort of '98, '99 into 2000, I mean, a number of people have made comments about what they're seeing now versus what they saw during that period in terms of market participants, general euphoric conditions, technology and what it's doing. How would you describe that comparison? Are you finding that similar? Are you finding them completely unrelated? I mean, how do you?
You mean market conditions now versus then?
Yes.
I find that to be totally different.
Okay.
And only even just from the technical side. I mean, the fundamental was probably very different as well. I just don't look at that. The market was just so narrow back then, as it usually is at the end of these major blow-offs, where just a small handful of stocks are driving the market. I know we had this chatter this year or within a couple of months that, oh, the NASDAQ is, it's X% of the market and it's responsible for, 200% of the gains and whatever. And these 5 stocks are responsible for the whole NASDAQ movement. Yeah, that's kind of true. But at the same time, everything else is going up. Obviously I'm using a little exaggeration, but the market itself was pretty healthy. Breadth was great. And new highs were coming all the time, and not just in a narrow area. So now that the NASDAQ is struggling, how did the Dow and the New York Exchange hit new highs by a significant amount a month after the NASDAQ peaked? because there's other things that are in play, and that's a pretty healthy situation.
Yeah, that's a great way to think about it. When you think back about your career, you've been through a number of different phases: secular bull phases, bear phases, kind of everything in between. Is there a particular set of market conditions that you have found more challenging than others, and why?
Um, I want to say that, when everything is going great, like in 2017, everything's smoothly trending higher. Like, very little you can say, well, it's an uptrend. Thank you. Here's your money for your market letter.
Yeah.
I thought that's kind of difficult when there's nothing to say. And then it's hard as a trader, I would imagine, I'm not a professional trader, but it's hard for a trader to say, okay, I'm just going to stick with it. I'm not going to worry about it. Another difficult period would be the early stages of a correction, not a bear market, a correction, because you have that feeling. You've seen all the charts where the first dip and everyone goes, oh, buy the dip, and then it doesn't work, and then the sentiment changes. But in the early stages of a correction, it feels bad, but it's not if you really dig down. And so I think that's kind of hard in the early stages of correction, not early stages of a bear, because I think in front of a bear we can get a lot of warning. We'll see things changing that are not healthy for the market, and probably the condition I'm describing is now.
Well, so I was going to say, the question on the tip of my tongue as you're saying that is, I can't help but notice that may be how I describe things right about now. Does it feel more like that corrective kind of period, or more like, boy, this is the beginning of what could be something more significant? What is it speaking? What is it saying to you right now?
It feels like it's just a little messy period.
Yeah.
The bull market seems to be in pretty good shape. It doesn't make sense to me, just stepping back from the analysis. Like, how could that be? We're S&P is up, what, 75% in a year, and how can that be? And we're still missing jobs, and blah 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 fundamentals. But that's where the indicators take us.
Yeah. Yep.
So we got to stick to your trick. You got to stay with what it is telling us.
So we're recording this sort of end of March 2021. I always ask people what their one chart would be. So if you had one chart besides just the chart of the S&P to help you make sense of what was happening, one sort of go-to tell to make sense of things, what would that be right now for you, and why?
Well, as a new Lowry disciple, it's got to be the buying power, selling pressure.
Yeah.
Because what it does is it breaks down into the market into supply and demand, and we can see when supply is growing, when demand is growing, or the reverse. Right now, that chart's a little fuzzy, but overall, it is, I think, a great chart to let you know in one picture if buyers are winning, if buyers are happy, that kind of thing.
Very good. I would have been very disappointed had you not gone to a Lowry's indicator at that moment, Michael. Well done. What you mentioned the MTA, and I think you got involved with the organization. I overall now earlier years relative to many that are participating in it now. Can you talk about what that organization, the MTA, and now the CMT Association, and your involvement with that? What has that done for you? What has that meant for you in your career?
I've been involved probably since the early 90s.
Yeah.
I've had committee roles. I was on the board of directors. I'm on my second stint as newsletter editor now.
That's right.
Yeah. I think Lowry has a couple of boxes of newsletters from the 90s I'm trying to get my hands on. So the question is, what was the organization like, or what did I
talk about
your
involvement in that organization and what it's meant for you in your career.
It is a great place to meet like-minded professionals. I know we don't go off to Florida in the winter every year for our symposiums like we used to do, which I thought was the greatest thing, because you get to meet your idols in a casual setting, having lunch at the pool bar with whoever. That was a great thing, and I've made friendships in these things that are still, I still have. But getting together with like-minded professionals and learning from them, networking with them, saying hello to them at an unrelated conference, say a Traders Expo, and you see one of them. I mean, you have an instant friend, and there's something to talk about. So for me, the organization has been great for meeting other professionals, expanding your network, which I think is key for learning and getting a job, quite frankly. Hey, I know someone who does this, or you should try this as your next step to getting a new job.
Yeah. I think many of us that have been involved with that organization have memories, or especially for me, early career memories of getting to meet people like Ralph Acampora and Phil Roth and John Bollinger and John Murphy in a very casual setting that ended up being formative discussion. Probably, not a big deal for them, but a huge deal for me as I'm trying to get, figure out what I wanted to do with my life.
Exactly. I recommend it to anyone who's interested in technical analysis.
Now, we skipped, as we were going through your sort of early career, we missed where you went to school, which I believe was in the Boston area.
I am a Brandeis undergrad graduate.
A couple of us have taught technical analysis. Charlie Kirkpatrick taught technical analysis there. I taught a course there. And what did you study? Because it's sort of a financial and yet a non-financial double major, if I remember right.
Brandeis is all bachelors of arts.
Yeah.
So I have a BA in physics, and in economics, which is kind of strange, but hey, I'm supposed to be learning.
The economics makes sense to me. How do you justify the physics? Is it the mathematical nature of what you're able to do, or how would you describe it?
I hate to admit that I was looking for the unusual, but I am deeply interested in physics and science and things like that, astronomy and following what NASA's up to, and the probes are going out to the other planets and all that. So for me, physics was necessary knowledge for what I didn't realize that I liked so much, which was just how things work. The economics, I admit, was an afterthought because I had blown through my requirements so early. I said, what am I going to do with my senior year? I'm not going to waste it. So pretty much majored in economics as a senior. That's all I took. Smart or not, I don't know, but I'm glad I have at least some of that background.
Fair enough.
And I'm jealous of all you guys who taught at my alma mater when I couldn't.
It was a fantastic spot, and what a great environment. I enjoyed that very, very much. We as one final question. So I think on your Twitter page, you call yourself a Jargon Buster. Can you give an example of a myth or a market, something that people want to believe that just isn't true?
Well, it's not so much as market myths, is explaining the market. I've been writing about the market more than anything else. And that's also my advice to up and comers. What do I do? How do I network? I said, start writing, even if it's for free, just start writing everything. So where was I going with that? See, I'm just lost here. Where was I going with that?
You were jargon busting for us.
Brain busting. The point is, especially writing for a publication like Barron's, they may be sophisticated investors, but they're not technicians. So I'm not afraid to introduce a term, but I have to explain it in English. And the fewer terms I introduce but explain in English, the better the story is to most people as far as understanding what I'm saying. And I'm sure you get it, and a lot of people watching this are going to get it. They say, wow, I saw you on TV. You look great. I didn't know what you were saying, but you look great. So the whole idea, since no one can see me as I'm writing, I have to sound great or read great.
Right.
So that was the whole point of jargon busting and explaining things in plain language so that anyone could understand it, because that's who the general audience is for all things that are out there.
Well, Michael, when I think about you and all of your work that I've consumed over the year from Barron's and elsewhere, if there's a jargon buster, I think you certainly deserve that title. Trying to simplify what can a lot of times be thought of as a complex markets and complex practice. This has been awesome to sit down with you, Michael. Thanks so much. Congrats on all your success. Wish you the best as always, continuing at Lowry. And thanks again for sitting down with us.
Thanks for having me. This was fun.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.